Hello and welcome everybody to another episode of Perkasie Business Chat. Today we're going to switch things up a little bit. I have a co-host with me today, Steve Barth, the Economic Development Consultant for Perkasie Borough. And our guests are Ashley Heaton and Joe Nolan from Pursuit Lending. Welcome everybody.
Welcome.
Thank you, Joe.
We thought this would be an interesting show for our businesses in the Perkasie community because Steve, in his role as the Economic Development Director, often is in contact with existing and prospective businesses who are either looking to relocate to the business or relocate to the borough or expand their business within the borough. And in doing so, he comes in contact with some interesting people. And in his work with a prospective business in Perkasie, he came across Pursuit Lending. And so we want to find out a little bit about what Pursuit can do for our businesses. So Ashley, if you would take a minute, just tell us a quick overview of what Pursuit Lending can do.
Sure. We're called Pursuit, formerly known as the 504 Company. We actually rebranded this February, and we've been in existence since 1955. We're a nonprofit organization referred to as a CDC, or a Certified Development Company. We're actually the third largest in the country of about 270 nationwide, and we provide SBA and non-SBA loans for small businesses throughout Pennsylvania, New York, and New Jersey.
And so how does that particularly work in the case of a Perkasie business? Steve, talk a little bit about how it might work from your perspective.
In my role in courting new businesses and helping our existing businesses, a lot of my focus is on people's financing and access to financing. So in the way that Pursuit and Perkasie came together, we're opening a new microbrewery called Mystic Ways Brewing, which will be on Walnut Street. And it's a new venture startup brewery. And so a lot of times with small business startups, you have to pair financing. And so one of the things I try to do is create this bubble of prosperity in Perkasie to utilize all the other resources and businesses we already have. So I had referred Mystic Ways to American Heritage, which is a credit union down on Constitution and Walnut Street. And they in turn interact with Pursuit, and Pursuit is a preferred SBA lender. So in this scenario, American Heritage is what they call first position. So the bank takes a 50% interest in this loan, and then Pursuit with SBA finances the additional 40%, and then the borrower or business would have 10%. And so we work very carefully. The Mystic Ways project includes the purchase of the business, and then the fit out and renovation of the building and purchase of equipment. And so Ashley can probably speak a little bit to that, about how they work on it, because it's a collaborative effort, amongst all of us.
Ashley, maybe you could explain a little bit, what is the advantage of working with Pursuit in a situation like Mystic Ways?
So it's a great advantage to all parties involved, especially as we're going through this pandemic and lenders are kind of cautious as to what types of businesses and industries that they're lending to. We're able to offload some of the exposure for those banks and credit unions and partner and provide up to 40% of the loan. So as Steve mentioned, we came in and helped American Heritage. We put together the financing package, we helped with the underwriting, and we were able to limit the out-of-pocket money for the borrower. And the benefits of the 504 program is that our second mortgage lien, that is that up to 40% portion, is fully amortizing, locked for 25 years fixed, no balloon. And you can rarely find that in any other product. And it's always going to be a below market rate. So just to give you an example, our current 25-year fixed rate is 2.6%. It's really unbelievable. It's at an all-time record low. And so we have a lot of activity going on right now. In addition, the program allows you to roll in soft costs or closing costs associated with purchasing a property. Most conventional commercial mortgages don't allow that. You would have to pay out of pocket. So that's usually transfer tax, title insurance, appraisal, environmental. And those fees can add up. I mean, $20, $30, $40, $50,000. So our goal is really to limit the borrower's out-of-pocket money so it can be preserved for the future growth of their company, whether it be a startup or an expansion that we're dealing with. And again, the minimum down payment requirement, most conventional commercial mortgages are going to require at least 20 to 25% down, depending on the situation. So we're really able to help and step in and add a lot of value to both, like I said, both parties involved, both the borrower and the lender.
Steve, can you talk a little bit about, from Mystic Ways' perspective, how this helped them establish a business in Perkasie?
Yeah, so I've been speaking with them since September, and so what's unique, not only amongst them but a lot of our businesses, is that they are actually purchasing the property, which is, from a finance perspective, is desirable. And so not only did we have to work on the property itself, but it was the finance plan for fitting out the brewery. So that's buying the vats, it's creating a tasting room, it's renovating the building. They're going to be, the building as it exists today is broken up into four small rooms, and they're going to be removing the walls, having a bar tasting room, and then high top tables within the facility. And so, a lot of it's the visioning about, how they would run and operate the business, but then it's also the reality of, finding out the equipment, like working out, how many barrels of beer can they produce, and then sort of working backwards about, selling pints of beer and, the equipment purchases. And I think one of the things typically, for what they would consider like a business venture startup, is banks typically, in small communities won't finance 100% of that. So partnering with Pursuit is really ideal because the banks are more comfortable. They're sharing the risk. That Pursuit part of it is guaranteed by the SBA. And then the way it works is the bank administers the total loan amount. And then once the fit outs and construction are completed, then the funds are released from Pursuit to American Heritage. And so for a lot of small businesses, getting access to capital is really difficult. And so, by developing these really strong finance models, it allows our businesses to kind of grow and expand. And a lot of them are really trying to do that. So,
Ashley, it sounds like a very good deal for the small business owner. It also sounds like a pretty good deal for a credit union like American Heritage. This is really a win-win-win for everybody involved.
Absolutely, and we're really excited about this project. We love breweries at Pursuit. We love to patronize them as well, and we're excited to get this project off the ground for and for the township as well, for the Perkasie area.
Are there any other kind of specialty businesses that are particularly suited for this kind of financing?
It's a great question. We actually lend to all industries across the board, so we see a wide range of them. The only businesses that we don't lend to are nonprofits. So you have to be a for-profit industry, but to give you some examples of recent deals or industries that we see a lot of manufacturing clients, daycare, medical, retailers, restaurants, salons, even hotels, car washes, contractors, you name it. So I think those are a lot of businesses that you have right within Perkasie.
Absolutely. And also the SBA likes to focus on some of the underserved communities and people who work in those industries too, in terms of, say, women or minority-owned businesses. Is that true?
Absolutely. SBA has a strong focus in lending to those underserved markets. There are certain public policy goals that must be met in qualifying for an SBA loan. So SBA, makes every effort to lend in those underserved markets and in rural communities as well.
Nice. Is there anything else that you would like to add about Pursuit or your particular 504 program?
Well, I would say that, we partner well with any of the local banks in the community. We're happy to assist with lining up the financing along with Steve. We're a very collaborative team and group, and we're really here as a mission-based organization to help businesses grow. We also offer other programs that are available through access to capital programs that don't require any participation, like the 504 program. We have a community advantage program that's through the SBA 7A that provides financing for up to $250,000 for businesses that might not be able to qualify for bank financing or might need terms that the bank doesn't offer. So we can provide that financing. It's great for startups that might be needing money for fit out or working capital costs or potentially refinancing existing debt. And we also offer a quick access to capital program. So I don't know if you guys are aware of all the fintech online lending that's been coming out over the last several years. Some of those are considered predatory lenders with high interest rates and daily payments out of your account. So we introduced something at Pursuit called the Smart Loan that is approved within 48 hours and funded within 5 to 7 days. So in a sense, it could be a good complement right now to a PPP loan because we allow mostly any working capital or any source of proceeds to be used for this loan, where PPP is a little bit more restrictive. In addition, I forgot to mention, oh, sorry, were you going to say something?
That's okay. I was going to say, speaking of PPP, you're one of the few lenders around that are still participating. And Joe, you want to tell us a little bit about how Pursuit can help our businesses with PPP?
Yeah, absolutely. So we've been actively lending new PPP loans since April 7th. So we were one of the first in the country that really started sending loans out the door. Over the last 4 months, we've done over 6,000 loans, over $500 million with a team of 35 people. So it's really been a trial by fire, but it's allowed us to develop a lot of expertise in terms of what is eligible, what isn't eligible, and really trying to understand the concerns that small businesses have around this loan that they are taking out and trying to understand how it's going to affect them while they're trying to make plans in really unprecedented times.
And you could also help guide them through the forgiveness aspect of PPP. I know that's a big concern about businesses. They don't want to take on debt at this time, but they'd love to be able to comply so that they can get their loan forgiven.
That's exactly right, Joe. And it's probably the number one question we're getting right now is how is the forgiveness going to work on the PPP program? There's a lot of different theories that are out there. You go on to forums or you start asking your friends and you'll probably get 6 or 7 different answers for how it's going to work. And the reason for that is the guidance has not been released yet. That's the number one thing I want people to know is that the formal guidance from the SBA is still being developed. So anyone that tells you for sure how it's going to work, they might be right, they might be wrong. Just keep that in mind.
Right.
In terms of what we do know for sure, there's been some significant changes to the program through a bill that was passed on June 5th that modified the PPP forgiveness pretty significantly. One, if you remember the original program, 75% of the cost over an 8-week period needed to be going to payroll in order for it to be forgiven, and up to 25% to go to rent, utilities, and other small costs like that. The revision changed that. So now you have to use 60% of the money over a 24-week period. Just to throw some complications out there, we don't know exactly what that means in terms of does that 24-week period replace the 8-week period? Do you necessarily pick an 8-week period inside that 24-week period? And it also led to some confusion about does that change my loan amount, since the 8 weeks was supposed to be the 2 months of payroll that you were getting. It does not change your loan amount. It just changes your forgiveness to make it easier. So what has been released is a application from the SBA that shows the information that they're going to require. That's already been updated twice with different requirements. So again, that's more guidelines than law. So it is going to be a good thing to look at that off of either the Pursuit Lending website or off of the SBA website. That's going to give you an idea of the documentation you should be holding on to, but don't feel like you have to fill that out and send that in. All the lenders are working right now to build digital platforms for that application to make it as easy as possible for borrowers. And on top of that, we're sort of crossing our fingers that there's been some rumors that loan amounts below a certain dollar figure will just be forgiven, although nothing has been finalized and there's nothing in stone. But there is a considerable effort being made in Washington to try to make this as easy as possible for borrowers and for lenders.
Well, it's good to know that Pursuit is still an option if somebody is looking for PPP money at this particular point. Ashley, back to you. Your segue to PPP was just too good for me to resist. So if you
I know, I led you to that one.
That was a good one. Teed that up for me just fine. What else did you want to say about Pursuit?
You know what, I wanted to mention, I think this is really important for business owners at this time. Again, we're all going through some crazy times right now. So anything that we can do to help to restructure a borrower's balance sheet and provide them additional cash out, we're looking to do. So one of those options that we do have with Pursuit is to utilize what's called the 504 refinance program. So any business owners out there that might have an existing conventional loan on their building that it's owner occupied, it has to be at least 51% owner occupied. Maybe they have a combination of their purchase mortgage, construction loan, equipment debt. We can take it all and refinance it at rates below 3%, and we can also give them 20% cash out based on the equity in their property, and they can take that and use that for business operating expenses. So again, as they're going through the pandemic, businesses have been shut down. They might have maxed out a line of credit. They might have they might need extra money for supplies because they don't have their receivables coming in. This is a great way to not only lock in at a low rate, but to get some cash out. And again, those are amortized over 25 years. So this would be great for businesses that have ballooning commercial mortgages, or they're just thinking ahead and wanting to get locked in at a low rate. We can include their prepayment penalty into the loan. So it's a great program that should be highly utilized at this point. And
sounds like you're offering a lot of great options for our businesses. If folks wanted to get in touch with you, what's the best way to get in touch with either you or Joe?
So I can give you my email address and our company website. My email address is AHEATON, that's A Heaton, at pursuitlending.com. And our website is pursuitlending.com. And I'm assuming you can put that on your Facebook page as well.
Right. We'll definitely include that in the description of our little discussion here today. Steve, anything that you want to
add? Some of the things, I don't know if we have time, but they're some of the businesses in the borough have some different financing scenarios. If we could just talk about some of that. So for example, we have some existing businesses that are growing and expanding. So if they wanted to buy a second property and work with you, they can utilize sort of the asset of the existing property and use that to leverage to buy a second one. Is that true?
Absolutely. So we might not even need a borrower to put actual cash equity into a project. So if they own an existing property that are looking to expand, or they're looking to maybe put an addition on, they have a surplus of land where they're currently at and they're looking to put an addition on for the expansion, we can leverage the equity in that existing property towards their required equity injection in the 504. So if there's existing debt on it, we can certainly consider refinancing that as part of the project and then using whatever equity is left towards the project expansion.
Okay. And one of our other businesses, they own a large building in the borough. Now, some of their original financing was through another state agency. And the interest rate, I believe, is at 8%. Now, is that something they can work with you and refinance, the existing debt and kind of restructure it into their operating costs then?
Potentially. There are certain eligibility requirements that have to be met. It has to be a conventional loan. It has to be in place for 2 years, and we have to prove that at least 85% of the original loan was used for a fixed asset purpose, because again, the 504 is set aside for owner-occupied real estate, improvements, equipment, those types of things. So if it meets those parameters, then we can certainly look to assist them with refinancing that high interest rate debt.
Okay. One of the other commercial property owners in the borough owns, has a lot of our retail tenants. Now, if he were to refinance, is he eligible for that? Like he doesn't occupy the building, but he might have 10 different retailers like in that property itself.
So unfortunately, that would not be eligible in any SBA program. The SBA only lends to owner-operator businesses. But the good news is that if a business owner does want to consider purchasing a mixed-use property that might have either a commercial or residential tenant, as long as the business itself occupies 51% square footage of the building space, they would be eligible. So they can take advantage of the rental income and still take on the benefits of the 504 program.
Okay. If we were working on a property that somebody has a long-term lease with a government agency, so they would not technically be the owner of the building, are they able to finance things through you?
They are. We can do leasehold improvements to an extent. It just depends on the nature of the improvements. Typically, cosmetic improvements aren't great for 504s. They might be better suited for SBA's other loan program called the 7A. But if there's more equipment involved, for example, a manufacturer or restaurant, those might be good projects for the 504. And we can also utilize the program for land leases.
Okay. And then I'm working on a lot of industrial properties. Like, can some of these loans be used for land development? You know?
Absolutely. As long as it's owner occupied, we would be able to do that.
Okay. And then some of our businesses, during the pandemic are trying to reinvent themselves. And so one of them is trying to launch off a venture kind of online business. So one of the partners of the business owns the building, but if they wanted access to capital, like would that have to kind of go through, like they would use the property as the asset and then use some of the funds to, create this kind of web-based application?
We could certainly look at that to see if it would qualify under the 504 refinance program, if they were interested in that. Or we could also look at one of our access to capital programs, just depending on the amount of funds that they need and the time frame that they're looking to get the funds. Or we could do both.
And then I often work with both the state and the county economic development corporations. Are we able to pair some of that with you? So that for the industrial properties, that would I think they can include 50% of financing through the PETA loans. And then the county position is roughly 30%. And then a lot of times what I'll try to work out is, there's certain tax credits related to equipment purchases and things like that. So are we able to work with you with some of these other agencies, blend the financing?
Absolutely. We can work with both state and county funds as either additional debt or equity. So if a borrower doesn't have the required equity, there's often county funds that can be used for that, sometimes state. It doesn't always have to be cash equity. So I encourage business owners that don't necessarily have the money to put down to buy a property. Speak with Steve, speak to your local resources, because there are ways to get money. Borrowed equity is okay in the 504 program. You can even use a home equity line of credit, a business line of credit. So essentially you could get up to 100% financing. So there are plenty of options out there, including partnering with local resources.
Okay, and then my final question, this is kind of with the SBA loans and the PPP. Some of the folks we were working with I think the requirement was, do they have to put personal property assets, as, that would be sort of their equity? Because that was one of the concerns why people backed away from those loans.
Joe, do you want to take that one?
Yeah, absolutely. So the PPP program is completely unsecured. There is no collateral that is going to be required. The biggest things you need to have are payroll from 2019, if you were in business for the full year. If you're a Schedule C business, make sure you have your 2019 Schedule C ready, along with any 1099s. But the beauty of this program is you do not need to be able to provide collateral for it. It is a completely unsecured loan that can be completely forgiven. In addition, it is also on full standby for up to 10 months after your loan forgiveness period ends at 24 weeks we talked about earlier, or until December 31st, 2020. So if you do take out a PPP loan, just know that you have 24 weeks before you have to apply for forgiveness. And even if you don't apply for forgiveness right away, you're going to have at least through the end of the year before the first payment would come out.
Okay. Would the businesses have to retroactively provide that 60% payroll, say from March 15th when this started? Yes?
Well, it's actually going to be based off of the date they received their loan. That is the earliest period of time that they can pick, although there is some discussion about letting people go back earlier. So we're still waiting for what the SBA and the Treasury are releasing FAQs to provide answers to these specific questions. And at pursuitlending.com, we're updating daily whenever there's a change to the forgiveness program. So even if anyone watching didn't necessarily apply with us, we are a nonprofit, so we always like to help our community any way we can. And we're developing and we've been maintaining a repository of knowledge on the PPP program at pursuitlending.com.
Thank you. One of the other things I think that changed in the guidelines, wasn't the payback period extended? I think originally it was like 12 to 18 months. Now it's 2 years to 5 years. Is that correct?
Great point. Yeah, that was another change in the June 5th bill that was passed. The original time period was 2 years. So all PPP loans that were approved by the SBA prior to June 5th have a 2-year repayment for any part of the loan that does not get forgiven. If your loan is going to be 100% forgiven, the loan period does not matter. The June 5th on, all loans are now 5 years. So that extends it out. And if you do have a portion of your loan that is not going to be forgiven, maybe you weren't able to hire everyone back, maybe your payroll went down, maybe your landlord gave you rent forgiveness, so you can't necessarily show those payments. It's going to be much easier to keep up over a 5-year amortization rather than 2. And if your loan was issued prior to June 5th, you can change it from a 2-year to a 5-year amortization. It just needs to be agreed to by you, the borrower, and by your lender. But the SBA has provided guidance for how to request that. So, if you are looking at it and you're starting to get a little bit worried about your forgiveness, or you don't want to have a huge loan that you weren't necessarily expecting, talk to your lender. There are guidelines out there for how to extend out one of those earliest loans, the people that probably needed the money the most. There are still resources out there to modify it if you need it.
Excellent. Thank you. So Joe and Ashley and Joe, I don't know if there are any other programs that you'd like to talk about. I mean, we would like to actively work with you. Our community is expanding actually pretty rapidly. We have about 5 new businesses, right on the brink of opening right at this moment. And Perkasie is unique in that we have a lot of women-owned businesses, but we also have a lot of our business owners are residents within the community. And so they have a very different vested stake in kind of the growth and connection of their businesses is the heart of the community. So we look forward to working with you, and me in particular, like helping some of our businesses kind of refinance things, and we can continue working on this. And Joe, we'll post all the kind of links to your websites and emails and phone numbers and things.
Yes, absolutely. Steve, thanks for summing things up. That was really good. We had a lot of good information shared here today. Again, contact for Ashley and Joe will be in the description of this video. And if you need to get in touch with Steve, you can go through the borough for that. Thank you very much again for your time today. We look forward to all the cool things that will be happening in Perkasie over the next couple of years. Thanks.
So much for having us.
Thank you
So much.